In this video, we're breaking down a massive shift already happening in the market right now, and more importantly, where smart money is quietly moving before most investors even realize it. For years, the market rewarded hype, narratives, and future promises. But when conditions change, when money becomes more expensive, and when investors start demanding real results, everything shifts. Capital stops chasing stories, it starts chasing earnings, it starts chasing cash flow. And that is exactly where we are right now. This is what investors call the Great Rotation. And if you look at history, these moments don't just create small opportunities, they create entire waves of new winners. Because money does not leave the market. It just moves from crowded trades into overlooked businesses, from expensive stocks into companies that are actually producing results. And the key is catching that shift early at the beginning, when the signs are there, but the crowd is still distracted. The first company we're going to break down sits right in the middle of one of the most important trends powering the modern economy. Let's talk about Belden, ticker symbol BDC. Now this is not a flashy company, you are not going to hear about it on social media every day. It is not a consumer brand, it is not something people get excited about at first glance. But this is exactly the type of business that tends to outperform during a rotation, because Belden operates behind the scenes, in the infrastructure layer of the economy, and that is where real value is built. Belden provides networking, connectivity, and data transmission solutions used in industrial environments, data centers, and mission-critical systems. In simple terms, they help machines communicate, they help factories run, they help data move. And in today's world, that is everything, because every major trend you can think of, automation, AI, smart manufacturing, data expansion, all of it depends on reliable connectivity, and not just any connectivity. High performance, secure, and extremely reliable systems that cannot afford to fail. That is Belden's world. Now here is what makes this business powerful. Once their systems are installed, customers do not switch easily. These are not plug-and-play consumer products. These are deeply integrated systems inside factories, infrastructure, and operational environments where downtime can cost millions. So when a company chooses Belden, they are choosing reliability. And that creates stickiness. That creates long-term relationships. That creates recurring demand. This is not a business chasing trends. This is a business embedded in operations. And that is a huge difference. Now let's connect this to the rotation happening right now. When money was cheap, investors were willing to pay extreme premiums for future growth. They did not care as much about profitability. They did not care as much about margins. They were chasing what could happen. But when conditions tighten, when rates stay higher, and when uncertainty increases, the focus shifts. Investors start asking a different question. Not what could this company become, but what is this company actually producing right now? And that is where Belden starts to stand out. Because this is a company generating real cash flow. This is a company improving margins. This is a company focused on higher value solutions, not just volume. That shift matters, because it shows discipline, it shows management understands capital allocation, and in a rotation environment that becomes incredibly important. Now here is something most people miss. Belden has been actively reshaping its business. It has been moving away from lower margin segments and focusing more on solutions that drive higher profitability over time. That is not just growth, that is smart growth. At the same time, the company has been returning capital to shareholders through share repurchases, which means fewer shares over time. Which means each share represents more of the business. That is how long-term value is built. But here is the disconnect. Despite all of this, Belden is still not widely talked about. It is not priced like a high-growth tech stock. It is not attracting retail hype. And that is exactly why it becomes interesting right now. Because during a rotation, money looks for this exact setup. Strong business, real earnings, improving margins, and still relatively overlooked. Now think about the bigger picture. Industrial automation is not slowing down. Data demand is not slowing down. Connectivity needs are not slowing down. If anything, they are accelerating. Factories are becoming smarter. Systems are becoming more connected. And the need for reliable infrastructure is becoming more critical every year. Belden sits right in the middle of all of that. This is not a one-year story. This is a multi-year, even decade-long trend. And when you combine that with a market shift that is starting to favor companies with real fundamentals, you get a powerful setup. Now, does that mean the stock moves overnight? No, that is not how this works. The biggest gains are usually not made in a straight line. They are made over time, as the market slowly reprices the business, as more investors recognize the value, as capital continues to rotate. And that is why getting in early matters, because by the time everyone is talking about it, the easy money is already gone. Belden is not the kind of stock people chase at the top. It is the kind of stock people wish they bought before it became obvious. And that is the opportunity you are looking at right now. Because the rotation is not coming. It has already started, and Belden is exactly the type of company that tends to benefit when it does. If this resonates with you, you're exactly who this channel is for. Please hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. Now let's move to the second company, and this one is even more overlooked. 𝗗𝗓𝗏, ticker symbol CLFD. This is one of those businesses that most investors completely ignore until they understand what it actually does. And once you see it, you realize it sits right at the center of one of the most important long-term trends in the entire market. Fiber, not AI hype, not software narratives, actual physical infrastructure that powers everything, because none of these digital trends work without one thing: data moving fast, reliably, and at scale. And that is exactly what fiber enables. 𝗗𝗓𝗏 is not building apps. They are not building platforms. They are building the infrastructure that allows everything else to function, and that is a completely different level of importance. As data demand explodes, from streaming, cloud computing, connected devices, and enterprise systems, the need for fiber infrastructure keeps growing. Not slowly, exponentially. And here is the key point most investors miss. Deploying fiber is not easy. It is expensive, it is complex, it requires time, labor, and precision. That is where 𝗗𝗓𝗏 wins. The company focuses on making fiber deployment faster, simpler, and more cost-effective. That might not sound exciting, but in this industry, that is everything. Because if you can reduce installation time, if you can lower costs, if you can simplify deployment, you become the preferred solution. And that is exactly what 𝗗𝗓𝗏 has built its advantage around. This is not just about selling products. This is about solving a real problem for customers. And when you solve a real problem, demand follows. Now let's connect this to the rotation. When markets start shifting away from hype and toward real businesses, infrastructure becomes attractive again. Because infrastructure does not disappear, it does not go out of style, it becomes more valuable over time. And fiber is one of the clearest examples of that. Now here is where things get interesting. 𝗗𝗓𝗏 has already shown strong growth driven by fiber expansion, but recently the company has faced short-term pressure, inventory adjustments, slower customer spending, temporary headwinds, and this is where most investors make a mistake. They see short-term weakness, and they assume the long-term story is broken. But in reality, these are often the moments where the best opportunities are created, because the demand for fiber has not disappeared. It has not slowed structurally. The world is still moving toward more data, more connectivity, and more bandwidth. That trend is intact. What you are seeing is a temporary reset. And when that reset happens, valuations can compress, stocks can pull back, sentiment can weaken. But the underlying business, the real long-term driver, is still there. And that creates opportunity. Because when the headwinds clear, when demand normalizes, when spending picks back up, the market starts to reprice the business again, and that is where upside comes from. Now think about positioning. 𝗗𝗓𝗏 is not competing in a crowded consumer space. It is not dependent on trends that can disappear overnight. It is tied to infrastructure that becomes more essential every single year. That is a completely different risk profile, and when you combine that with a market rotation that is starting to favor real businesses, you get a powerful setup. Because capital is not just looking for growth anymore. It is looking for durable growth. It is looking for businesses that can survive cycles and still come out stronger. 𝗗𝗓𝗏 fits that profile. Now let's take it one level deeper. One of the biggest advantages 𝗗𝗓𝗏 has is its focus on efficiency. In a capital-intensive industry like fiber deployment, efficiency is everything. Service providers are constantly looking for ways to reduce costs and speed up deployment timelines. If 𝗗𝗓𝗏 can consistently deliver solutions that help them do that, it becomes more than just a supplier, it becomes a partner. And that creates stickiness, that creates repeat business, that creates long-term relationships, just like we talked about with Belden, but in a different part of the infrastructure stack. Now here is where the rotation really matters. When capital starts moving into overlooked sectors, it does not move slowly forever. At some point, it accelerates. And when it does, the stocks that were ignored suddenly are not ignored anymore. And that is when repricing happens fast. 𝗗𝗓𝗏 is still in that early stage, still under the radar, still not widely owned. And that is what makes it interesting. Because the opportunity is not in what everyone already sees. It is in what they are about to see. And right now, the market is starting to shift in a way that could bring more attention to companies like this. Not because they are trendy, but because they are necessary. And in the long run, necessity always wins. Now step back for a second and look at the bigger picture. What you are seeing right now in the market is not random. It is not noise. It is not just volatility. It is a shift. And if you have studied market history, you know these shifts matter. Because this is where leadership changes. This is where capital moves from what has already worked into what is about to work next. For a long time, the market has been dominated by a narrow group of stocks. Money crowded into the same trades, the same narratives, the same expectations. And that worked, until it didn't. Because eventually the market starts asking harder questions. Where are the earnings? Where is the cash flow? Where is the real value? And when those questions start getting louder, capital begins to move, quietly at first, then all at once. That is the rotation. And the reason history matters here is simple. This has happened before, multiple times, not in the exact same way, but in patterns. There are cycles where growth dominates. There are cycles where value outperforms. And there are transition periods, where money shifts between the two. Those transition periods are where the biggest opportunities are created. Because most investors are still positioned for the last cycle. They are looking backward, while the market is moving forward. And that disconnect is where opportunity lives. Now think about the two companies we just broke down. Belden, Clearfield. These are not hype-driven businesses. They are not dependent on investor excitement. They are tied to infrastructure, to real demand, to long-term trends that continue regardless of market sentiment. And that is exactly why they become interesting during a rotation. Because when capital starts prioritizing fundamentals again, these are the types of businesses that get revalued. Not overnight, but over time. As more investors recognize what is already there, strong positioning, real earnings potential, and long-term relevance. Now here is the key mindset shift. This is not about predicting the market perfectly. It is not about catching the exact bottom. It is about positioning yourself in businesses that make sense, before the crowd fully catches on. Because by the time everyone agrees, the opportunity is no longer the same. That is why understanding cycles matters. That is why recognizing shifts early matters. And that is why the great rotation is something you want to pay attention to right now. Because it is not a headline, it is a process that is already unfolding. And if history is any guide, it is just getting started. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now I want to hear from you. Between Belden and Clearfield, which business do you think has the stronger long-term advantage when it comes to benefiting from this shift? And more importantly, which one would you feel more confident holding for the next 5 to 10 years? Drop your answer in the comments. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the StocksGalore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/StocksGalore and become part of our growing community of smart investors. Link is in the description. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.